Hello everyone, welcome to Certified Business Solutions, where we discuss about business related matters and we give advice to business. I will be a host, Lucy Maina, and with me is Dr. Kamau. Today we are going to talk about tax. Who is eligible for tax, what is tax, and why we pay tax, and who we pay tax to. Welcome. How are you, Dr. Kamau?
I'm fine, thank you. Good morning.
Good morning. Please say hi to our viewers.
Hi viewers. Welcome to Certified Business Solutions YouTube channel. As Lucy has said, today we'll be discussing about taxation, who we pay tax to, why we pay tax for, and maybe to just provide a definition for tax, or where taxes started. Taxes have been there with us since time immemorial. Even in the Bible, we remember when Jesus was being asked, who do you pay first? Do you pay to the Caesar or do you pay the tithe first? And Jesus said that you need to pay to the Caesars what belongs to him, and to pay to God what belongs to God. So it's not a new concept. It is a concept that has been here and will continue to be here with us. So welcome. Don't change the dial.
All right. So you can tell us what is tax?
Yes, let me start by defining what tax is.
Yeah.
Tax is the amount of money that individuals and businesses pay to the government.
Okay.
And people think that you have to be earning money for you to pay taxes to the government.
Yeah.
And also people think that a company or a business must be profitable for it to pay taxes to the government.
Yeah.
But it is a no.
Yes.
Whether you are earning money or you are not, you still need to pay taxes to the government. Whether the business is making profit or not, it still has to pay taxes to the government.
Okay.
Whether you are underage or whether you are as old as 100 years plus, you still have to pay taxes to the government. Whether you are sick, even at HDU, ICU,
Yes.
and whether you are very healthy,
you
still have to pay taxes to the government. No one is free from paying taxes. No one.
So as long as you're breathing?
As long as you're breathing, you're alive, you're not dead,
you
have to pay taxes to the government.
Okay.
Even if it is a child as young as 1 year old.
Yes.
Even the one who is unborn, still paying taxes. So taxes is, no one is free. It's just like, as long as that entity or that person is breathing.
Yes. They pay tax.
They pay taxes.
Can you elaborate more? How can a 1 year old pay tax?
Yes, how? Because taxes are divided into two. There are category number 1, direct taxes.
Yes.
Category number 2, indirect taxes. Direct taxes is what most people don't pay, because direct taxes are taxed on the income that you generate as an individual or as an entity. So income.
Yes. So that is direct tax.
That is direct taxes.
Yeah.
Indirect taxes now is tax on consumption.
Okay.
As long as you are consuming something that you have bought, you are eating.
Yes.
The food you have eaten is ugali or rice or chapati, and perhaps the stew is meat.
Yes.
The stew is the stew has been prepared, chicken, fish, and all that.
Yes.
As long that you have bought those items, let's say for instance you have bought from a supermarket, the supermarket will charge you VAT, value added tax, for those commodities that you have bought.
Yes.
It will charge you something called the excise tax. For those commodities that you have bought.
Yes.
If you have a telephone, if you have a mobile phone, and you load credit on that phone, you pay VAT on the credit that you use. You pay excise tax on that same credit. So any person, whoever, as long as you are living, you pay some sort of taxes. Okay. For the example that you have used, a 1 year old, there's a difference between a customer and a consumer.
Okay.
This 1 year old may not be a customer,
but a consumer.
But is a consumer. And as long as you are a consumer, someone is paying that taxes on your behalf.
Okay. Ah, okay. I think now it's clear. So, like in the hospital, is it the medicine that you're
Yes,
given?
yes.
Yeah.
The medicine that you are given,
Yes.
you need to pay taxes for that.
Yes.
Of course, there are some sort of medicines that are tax exempt.
Okay.
That you don't have to pay taxes for them.
Yes.
Especially taxes, some medicine for a disease like cancer,
Yeah.
or even for people living with disabilities.
Okay.
They're usually exempted from paying taxes.
Okay, okay. Ah, oh, that's fine. I see it. Oh, yeah. I think now it's now clear.
Yes.
But as long as you're breathing, as long as you're consuming something,
Yes, yes.
you'll have to pay tax.
Yes, yes.
What are the types of taxes that you have?
Yes, as I had defined,
Yeah.
we have two broad types.
Two broad types.
That is direct taxes and indirect taxes.
Yeah.
We start with direct taxes.
Yes.
That is, they are income based.
Yes.
So, again, they are divided into various sections.
Okay.
We start with the corporation tax.
Yes.
Corporation tax is taxes that are paid by business organizations.
Okay.
Businesses or organizations that
Yes.
have been registered for purposes of making profit. Because non-profit making organizations,
Yeah.
NGOs,
Yeah.
charitable organizations like churches, those do not pay taxes.
Okay.
So not any organization. It
Yes.
has to be a business organization
That generates profit.
that generates profit. They pay taxes at the rate of 30%.
Okay.
And for a company to be charged corporation taxes at a rate of 30%,
Yes.
it has to be registered in Kenya.
It has to be registered. So it is, if it is registered in another country,
Yes,
but it is operating in Kenya.
that one is considered as a foreign company.
Yeah.
And foreign companies, they pay taxes at a higher rate, which is that 7.5%.
Okay.
It is an incentive by the government
Yes.
to protect the companies that are registered within its borders
Okay,
from
okay.
unfair competition.
From now the ones registered from other countries?
Yes.
Okay.
You know, we are still a developing country.
Yes.
That, and we used to be called a third world countries some
Yes.
years before.
Yes.
But at some point, third world, referring to a country as a third world country,
Yeah.
was found to be abusive, was found to be unethical, was found to be demeaning.
Okay.
So you are given a better name.
Developing.
Yes, a
Okay.
developing country.
Yeah.
But for me,
Yes.
a name doesn't mean anything.
Yeah.
A rose by any name,
Yes.
it will still smell good. Even if you call rose a funny name,
Yes.
it will
The
still
smell does not go away. It will
Yes.
still look beautiful and
Yes.
smell very nice.
Yes. So if you are referred as a developing country or as a third world country,
Yeah.
it does not matter. But now the government
Yeah.
protects its own companies
Yeah.
that are registered within its borders by charging a lesser corporation tax at
Okay.
30%.
Okay.
So companies like KCB,
Yes.
companies like Kakuzi, they are charged at 30%.
30%.
Other companies that they have presence in Kenya,
Yes.
but were not incorporated in Kenya,
Yes.
they are charged at that 7.5%.
Okay.
Like General Motors,
Okay.
like the Apple, like the Shell company.
Okay. Ah, okay.
And that's the advantage that. So corporation tax.
Yes.
Number two is pay as you earn tax.
That
These
is
are for payee.
Okay.
These are for individuals.
Yes.
That any person who is employed
Yeah.
gainfully, you know, you can be employed, but you're not employed gainfully.
Gainfully meaning?
You know, even a slave is an employee.
Oh.
A slave is an employee.
Okay.
So any person who is in gainful employment,
Yeah. Like you're getting something at the end of the month.
like you are getting something at the end of the month,
Yeah.
you are supposed to pay taxes
Okay.
in form of pay as you earn.
Yes.
You know, it's very funny that people think that the low income earners, they don't pay taxes.
Do they?
They pay.
Apart from now the consumption part, indirect
Yes,
tax.
as long as you are generating any income,
Yeah.
even if you generate 1 shilling in a year,
Yeah.
you're supposed to pay taxes on that.
Uh,
Even if you generate a cent, you pay taxes on that.
But I think if you, right now, if you're earning 24,000 and below, you don't pay tax.
Now that's the twist. Now that is the twist. Because the government has given something called personal relief.
Okay.
Personal relief of 2,400 per month.
Per month.
Per month.
Okay.
That is any person
Yes.
who is, and which translates to the fact that any person who is earning 24,000
Yes.
and below is not supposed to pay any taxes, because the lowest form of taxes, the lowest rate of taxes is 10%.
Yes.
So someone who is earning 1,000 in a month is charged 10% of that. He's supposed to pay 100 shillings
as tax.
as tax.
Yeah.
I don't know why it is so equivalent to the tithe, because even tithe is at 10%.
Yeah.
So if you are earning 10,000 per month,
Yes.
you are supposed to pay 1,000 to the government.
Okay.
If you are earning 20,000, you are supposed to pay
2,000.
2,000.
Yeah.
But now the government tells you, you are earning 20,000 and you want to pay us 2,000. Please don't pay us that 2,000.
Yes.
Because actually we have given you a tax discount of 2,400. As long as you have not exhausted that discount you have given you,
Yes.
don't pay us anything. Don't you think the government is considerate? We have a good government?
Yeah, I think it is on tax matters.
Yes. It's always good to give credit where it is due.
Yes.
So any amount of money that is above 24,000 is not what gets taxed.
Okay.
But people who are earning lower than that,
they get the tax relief.
They benefit from the tax relief, and they pay zero taxes.
Okay.
And actually,
Yes.
before that, because now the tax relief is 2,400 per month,
Yes.
you will be very surprised. Because people don't give credit to the government. Initially, the amount of any person earning more than 13,900 shillings, 13,900 shillings was supposed to pay taxes.
Okay.
But after COVID came, now the government decided to protect the low-income earners and said any person who is earning 24,000,
below.
Yes, because initially it used to be any person earning above, let's say 14,000, was supposed to pay taxes. But the government thought, no, we need to come and again protect our own people. So what did it do? It expanded the discount, or the discount that it was given to the low-income earners from 13,000 to 24,000.
Okay.
So corporation tax, pay-as-you-earn tax.
Yeah.
And pay-as-you-earn tax, we have said the way. So pay-as-you-earn tax is calculated using something called the graduating tax scale.
Okay.
Graduating tax scale.
Yeah.
What it means, someone earning 24,000 and below, you pay at a rate of 10%.
Yes.
Then we add another 10,000. We say from 24,000 to 34,000. Now you don't pay 10% on that difference.
Yes.
34,000 minus 25,000, you pay 15% as taxes.
Okay.
It has graduated from 10% to 15%.
Okay.
Now we move from 34, we add another 10 to 44,000. So there we use another rate that we say now 20%. Okay. Any person who is earning more than 34, between 34, the difference between 44 and 34, that 10,000 is taxed at a rate of 20%.
Is it that 10,000 or the whole amount?
No, it is that incremental amount.
Okay.
You remember that's why it is called graduating tax scale. Okay. It's like some steps.
Okay.
Some step. The first.
So the extra amount is the one that you're paying at a rate of.
Yes, at a higher rate.
That graduating scale.
Yes, at a higher rate.
Okay.
And it's a fair tax principle that the people who are generating more income, they should pay more taxes. So
it goes up to how much?
It goes up to about 100,000. Yes. So it goes to 20%, 25% like that. So any extra income that you earn above 100,000, it is automatically charged at a rate of 30%.
Okay. Above 100,000?
Above 100,000.
30%?
30%.
Okay. All right. So they are just those two. What?
So those we said those are direct taxes.
Direct taxes,
corporation taxes and pay-as-you-earn taxes. Now we go to indirect taxes. And indirect taxes are also referred as consumption tax.
Okay.
That you only pay when you consume.
Okay.
If you don't consume anything, you will not pay. You will never pay that form of taxes.
Yes.
And this is what you are saying. As long as you are living, you are consuming something. Even if you are generating zero income.
Yes. As long as you're using something that you have bought.
Yes.
you'll have to pay tax.
Yes, assuming it is a retiree.
Yeah.
This retiree has no earning capability.
Yes.
But probably he has children
Yes.
who are giving him or her money.
Yeah.
Or probably he has some properties that are generating some income for him. So that once he receives that income,
Yes.
he spends that income, and now he has to pay taxes. So indirect taxes,
Yes.
number one, we have value added tax.
VAT.
VAT, which is commonly known as VAT. VAT is a form of tax that is payable to taxable goods and services
Okay.
that are produced within Kenya,
Yes.
and also that have been imported from abroad.
Okay.
So VAT,
Yes.
it has 3 rates. There are items that are charged at a rate of 16%.
Yes.
That is the most common.
Yeah.
Then there are those that are charged at 8%.
Okay.
These are petroleum and fuel and petroleum products.
Okay.
They are charged at 8%.
Yes.
You remember initially that tax, fuel and petroleum products used not to be charged in a VAT
tax, yeah.
until now IMF came in. After we borrowed, until we borrowed, and IMF said, now you guys, you have to collect more taxes.
Yes.
The government was not sure how to increase tax collections.
Yeah.
And he said, we'll tax fuel.
Wow.
And we'll do that at 8%.
Yes.
And fuel, because it is required to facilitate production of many goods and services,
And
including transport.
yeah.
That's why even the cost of living
Went
exponentially went up. Not a bit, exponentially.
Yes, yes.
So value added tax, 16% the general rate, 8% the petroleum
products.
and fuel and petroleum products, and then 0% are some goods. There are some specified goods and services that are charged VAT at 0%.
For example?
For example, items that are destined for exportation, to be exported outside Kenya.
They are not taxed?
They are not taxed because we need to ensure that our goods and services
Yes.
are competitively priced. So that they can compete with other countries in the world.
Oh,
you know,
okay.
there we are competing with the very developed countries
Yes.
that have high efficiency of production.
Yes.
So Japan, we are European countries.
Yes.
So if now you add VAT
Yes.
on the products that you want to export,
Yeah.
of course the person who is manufacturing them will have to add the price.
Yes, yes,
And
yes.
if you do that, you'll not be competitive.
Okay.
So there are commodities that are zero rated. Of course, even some like we had mentioned, items like machineries that has to be used by people who have cancer.
Yes.
People with disability, special needs.
Yeah.
All those they are zero rated.
Okay.
So VAT.
Yes.
Number 2 is exercise tax. Excise tax. Excise tax is a tax that is charged on any goods and services that are manufactured locally.
Okay. Any goods and services
that are manufactured locally.
Yeah.
Yes. And also now the government, with an attempt to increase its tax bracket and tax base, it is also charging excise tax on imported goods and services.
Okay.
So excise tax actually before it used to be referred as a sin tax. Sin tax, yes, sin tax. Because it was a tax that was charged on goods and commodities that were considered detrimental to the welfare and well-being of the society. Something like alcohol.
Okay.
Something like cigarettes, something like petroleum products. Because the idea was that, yes, we will allow BAT to sell cigarettes, we will allow EABL to sell alcohol here in Kenya and Kiroshe, but they should pay more taxes so that they also help us to start rehabs.
Seriously?
Yes, that was the idea. The idea. Yes. And of course, the idea is to discourage consumption of those commodities.
Yes.
But the government says, just in case that we have allowed you and some of our taxpayers get sick, then we'll tax you more so that we can be able. Yes. But now, the government, again, with its appetite to increase the revenue collection, it is taxing everything. You would be very surprised. Even airtime.
The credit that we buy from
Safaricom and other telecom service providers,
Yes.
it is charged excise tax. Recently, even the financial services, when you transfer money from your bank account or even when you are sending money using your M-Pesa, they charge a 20% 20% tax rate.
So it's like they are charging everything now.
They are charging everything. So the government has become very aggressive in terms of raising the amount of taxes that it collects. And now business people, they need to be very aware because there is a huge compliance risk. Huge compliance risk that if you are not aware what taxes you are supposed to pay, you might find yourself your KRA PIN being suspended. And when your KRA PIN is suspended, there are some types of businesses that you cannot conduct.
Wow.
So there's a huge...
So if they block your KRA PIN,
yes,
you cannot conduct some businesses?
You cannot conduct some...
Yes, can you get paid?
No.
You cannot get paid?
You cannot get paid because what?
They want to... Okay, when they are paying you, they will ask you for your PIN?
Yes.
But again, they will see it is suspended?
Yes. For instance, if we talk about VAT, value-added taxes, I supply you some... I sell to you some goods and services worth 100,000. Then you are supposed to pay me 100,000.
Yes.
But now, KRA, with an attempt to ensure that it reduces tax cheats and tax fraud, it appoints you as a KRA agent, as its agent, that you collect some... Because if I sell you goods worth 100,000, and I'm supposed to pay VAT at a rate of 16% of what I've charged you. So if I'm selling at 100,000, I will add 16%, and this is government money.
So it's 100 plus
16,000.
Which is 16,000.
So you are supposed to pay me 116,000. But KRA does not trust me 100%.
Because you might not pay.
Because I might not pay, but you have paid me. So what KRA does is it gives you power as the buyer, to withhold some amount of that taxes that you are supposed to pay to me. So instead of paying me 16%, you will pay me 14%. So you'll pay me 114,000. And that 2,000 you will retain.
And do what with it?
You pay to KRA.
Myself?
Yes, you pay to KRA. And you tell KRA...
I did business with Alex?
You did business with Dr. Kamau.
Yes.
And you paid Dr. Kamau 16,000 in form of VAT, but you did not pay him 16,000. You paid him 16 minus 2. So KRA, this is the 2,000. The other 14,000, expect from the...
Dr. Kamau to
pay.
Yes,
to remit.
What if Dr. Kamau does not pay?
Doesn't pay.
Some people do not pay.
No, that's when the KRA will suspend my PIN. And because you are also obligated, it is not a choice you have to withhold that 2,000. So when we are doing business with you, if you make another order and I supply you with another 100,000 worth of goods, and you try to withhold that 2,000 because it is done through the KRA system, then the KRA will tell you, you'll see a pop-up from the system telling you that the taxpayer that you are transacting with is not registered for VAT, or his VAT has been suspended. So it is a requirement by law that you should not do business with a person whose PIN has been suspended.
Or someone who has not registered.
Yes. I have received some clients, quite a number of clients, whose PINs have been suspended, and now their customers have refused to pay them because they are telling them we cannot pay you because before we pay you, it is a requirement by law that we withhold some amount of taxes, but you cannot be able to withhold because your VAT is deactivated for that obligation. So sort yourself, sort that issue, then come for your money.
Wow.
And it's terrible. During that time, as a business person, you are likely to lose your customers because
they are not going to wait for you.
They are not going to wait for you.
They will look for another supplier.
They will look for another supplier
or another business partner.
Yes.
So it is very important for a business to
be compliant,
and to pay taxes.
We always say that it's protection is better than cure. Protection is better than cure. And if you think that education is expensive, try ignorance. Your business can come crumbling down
Yeah.
within a matter of days.
Yeah.
And probably it's a business that you took so much time to build.
Yes.
Some business even that have existed for more than 50 years, even 100 years, they come
down.
Yeah, they come down because of taxes issues.
Okay.
So we were talking about VAT. We went to exercise tax. Exercise tax, we are saying about the airtime.
Yes.
The mineral water.
The one that we buy.
It is taxed. It is charged excise tax.
Okay.
And you remember, it was supposed to be sin tax.
Yes.
But not even the water. So excise tax.
The water, of course, it cannot be harmful to someone.
It cannot be harmful, but now the government has another agenda to increase tax collection.
Okay.
So everything that it is able to tax, it taxes.
Okay.
So excise tax.
Okay.
Then we come to customs tax.
Yes.
Customs tax is the taxes that you pay to the government, whether you are exporting or importing some goods and services.
Okay. So apart from the goods that are tax-free, the one that you have said for exports.
For exports, yes. Actually, most people think that there are no taxes for exports. As I was saying, that the government usually avoids taxing exports for purposes of making those products competitive
yeah.
price-wise. But the government, if now, actually there are some commodities that government taxes at a rate of 400%.
400%?
Yes, 400%.
That is a lot of money.
So if something is costing 100, the government asks you to pay 400 shillings to it.
Is that fair?
In form of taxes. It is very much fair. It depends from which perspective you are.
You are looking at it.
You are looking at it.
So there are some commodities which are free of tax.
Yes.
But some they are charged custom
punitively.
Yeah.
Punitively.
Yes.
For instance, if you have someone exporting raw hides and skins.
Yes.
Maybe you are from a pastoralist community.
Yes.
Or you are a slaughter. You deal with you are a butcher.
Yes.
And you have access to many raw hides and skin.
Yes.
Then, and you have a good market probably in Uganda or in Europe.
Yeah.
And you want to sell them the way they are.
Yeah.
The government will not have mercy on you. It will charge you a rate of 400% because the government does not want you to do that.
Okay.
What the government
they are discouraging.
They are discouraging.
Okay.
They would want you to sell to the local manufacturers.
Yes.
So that they can manufacture shoes.
Yes. Oh, yeah. Now I get it.
You get the point?
I think it's fair.
Yes. Because it doesn't make sense that you export raw hides and skins.
And they can be used in this country.
They can be used in even
to increase value.
To do value addition, to increase value.
Yeah. Okay.
Yes. So VAT, we come to excise tax. Then we have come to customs. And customs, we have said is the
exports.
Import and exports.
Yes.
Now, imports, when you are importing something like a car,
yes,
now that's when you pay customs.
Yes.
Customs duty. Now, the value of the car that you're importing is about, let's say, 1 million.
Yes.
That's fine. You will pay import duty.
Yes.
And import duty varies from 0% to 10%, and there is another one for 25%. So depending with what the nature of the good, yes, the nature of the good that you're importing, you will pay one of those tax rates.
Okay.
So you pay import duty.
Yes.
You also pay VAT.
On the same car?
On the same car. 16%.
Yes. Because it is import?
Because it is import.
Okay.
What else do you pay? Excise tax.
You're paying 3 taxes for one good?
No, we are not done. We are not done. We are not done. This is the government, and you need to give to Caesar what belongs to Caesar.
Yeah.
There's something called IDF.
Yes.
Import declaration fee.
Yes.
You pay it at 2% of the value of the imports that you are making.
Wow.
2%. There's something else.
Really?
RDF.
Yes.
Railway Development Levy.
Railway?
Yes. The SGR, you have to contribute to the
But the car
repayment
is
of
not coming via SGR.
Even if you stay in Mombasa,
Yeah.
but you have imported,
Yeah.
you have to pay railway development levy, even if you will not use SGR to bring it to Nairobi. That's a condition. So you pay all those taxes when you are doing importation.
Well, that is why the cars are...
Not the cars, even mobile phones.
Even mobile phones?
Anything. And
you have to pay all those taxes?
You have to pay all those taxes.
Because they're imports?
Because they're imports. Because they're imports.
Wow.
Because they're imports.
Mm-hmm.
It might sound punitive, but to the trader, but the trader does not feel that impact, because the end consumer is the one who will feel it, who will compensate all these taxes to them.
So if you want to say that if they were not paying all those taxes?
Yes.
Mostly export, the imported goods,
yes.
They would be a bit cheaper.
They would be a bit cheaper. But how do we pay our teachers? How do we pay our doctors who are working in Kenyatta National Hospital? Yeah. How do we do our roads?
Yes.
How do we construct dams?
Yeah.
How do we even pay police?
We have to pay them. Eh?
Yes.
So the government has to do
You know, every other time the government reads the budget, prepares the budget.
Yes.
Like now, this year it will be read in June. Last year it was read in April, because that year was an electioneering year.
Yes.
Now, this year, when the government prepares the budget, the CS for finance, and he's the former CBK governor, Professor Ndongo.
Yes.
Now, when that day will come and he will carry the briefcase, he will go to the parliament and say, we expect to spend 3 trillion in this financial year.
Yes.
He says, and we'll say the financial year 2023, 2024. We expect, and he might surprise us, because the last budget that was read by Ukuru Yatani was for about 3 trillion.
Yes.
This Ruto's government, they might even go to 4 trillion.
Yes.
But now, if we can discuss the one that was done by Yatani, it was for 3 trillion.
Yes.
And he said, we expect to spend 3 trillion in the year 2022, 2023.
Yeah.
Now, the question was, yes, you have said you will spend that amount of money.
Yes.
Where are you going to get it from?
How much do you collect?
Now, that's the question. Because at our level, family household level, if you say you are going to spend 100,000 in a month, and you want 10,000, someone will tell you are insane.
Of course.
Yes, he'll ask you, do like this. Do you hear something inside your head? Now, perhaps sometimes we should ask our CSs.
Yes.
Because now, when he said 3 trillion, now the question was, how much are we likely to raise as a country through tax revenue? Now, that year of income, we actually raised 2.1 trillion. No, actually, because it is the year that is still ongoing, 2022, 2023, the expectation was that KRA would be able to collect about 2.1 trillion.
2.1 trillion.
And we want to spend 3 trillion. So the question is,
deficit of 900 billion.
900 billion. Where do we get it from? Now, where we get it from is to borrow more.
Where?
Even when now everyone was thinking that we had already the burden, the debt burden was so much on us, so much on the common mwananchi. Now the government, instead of doing something that is called lean budgeting, that you would want to minimize your expenditure, so that you close the gap between the expenses and the income.
You spend what you collect, you will collect.
Or you spend what you collect. The government is actually widening the tax deficit gap. And tax deficit is when the expenses are more than income. And now the government has to borrow more.
What?
And if we think we are in a debt hole, we are only making it worse.
Because we'll continue to borrow as long as they are the expenses are more than the income?
Yes.
Okay.
So that's what happened, and that's why you can see this government is very aggressive
in closing holes.
Yes, closing tax leakages and ensuring that it improves on tax collection.
Yes.
So we said we have VAT exercise Customs, and customs, now we are saying you pay VAT, you pay excise, you pay IDF, import declaration fee, and you pay railway development levy. Now, let's go to the other form of taxes. We call it property tax.
Property?
Yeah, property tax.
Okay.
Property tax.
Yes.
If you own a piece of land,
yes,
in a municipal area, you pay two types of taxes. And of course, depending whether it is a leasehold property or a freehold property.
Okay.
If it is a freehold property,
yes,
and you are in a municipal area is like now CBD and its outskirts of Nairobi.
yes,
You pay land rent. And land rent is a form of tax that is payable to the national government because of owning that piece of land.
It is payable per month or per year?
It is payable per year.
Per year.
Whether you
Land
have
rent.
developed it or
Yes.
you have not developed it, land rent.
Whether
You-
it is empty or it has building?
Yes,
You
yes,
have
yes.
to pay the same amount?
You have to pay the same amount. And it's good that you have mentioned about building,
Yes.
because now if you have developed that
Yes.
piece of land and it is generating for you some income, then that income that you receive in form of rent, you are supposed to pay rental income tax to the government. And you pay 10% of what you have collected. If you have collected 100,000, you pay 10% of that to the government.
Okay.
And the government doesn't want to understand whether you have a loan.
Yes.
That you had borrowed some loan,
Yeah.
so that you could be able to develop that piece of land. The government will be saying, you are receiving 100,000, give us 10,000, 10% of that.
Yeah.
We don't
So
want to know
apart
whether
from paying the land rent, so that is a land rent?
Yes, yes, yes.
Okay.
And there's also land rates.
Yes.
Land rates now is a form of tax that is payable by property owners,
Yes.
now not to the national government, but to the county government.
Okay.
But for you to pay land rent,
Yes.
you have to be within the municipal.
Okay.
Yes, and the ownership form of that piece of land
Yes.
to be a leasehold.
A leasehold.
Because freehold,
Yes.
they are not supposed to pay any form of taxes.
Okay.
But though freehold,
Yes.
if they are within the municipal,
Yes.
even if it is freehold,
Yes.
you have to pay the land rates.
Okay, okay. Land rent.
Yes, land rent. What freehold don't pay at all is a land rent,
Land rent.
which is
Okay.
payable to the national government.
Okay.
But if you are a freehold
Yes.
and you are within a municipal area, you are enjoying the sewer line for that municipal area.
Yes,
You are
yes.
enjoying maybe other services that are provided by that municipal area.
Yes.
Then you have to, even if it is freehold, you have to pay for land rates.
Land rates, okay.
Then there is capital gain tax.
Okay.
Again, it is a tax charged on sale of properties.
Yes.
If you had bought a property at a cost of 1 million,
Yes.
then you have sold it at 2 million,
Yes.
then you are supposed to pay taxes on the profit that you have made
Okay.
on that piece of land.
Oh.
Rural land
Yes.
is charged at 2%
Okay.
when you make that kind of a sale and you earn a profit,
Yes.
and urban land
Yes.
at a rate of 4%.
Okay, okay. On the profit.
On the profits.
Okay.
Capital gain tax
Yes.
is also charged on shares, on the profit that you make when you sell securities shares.
Okay.
So if you have, which is at 15%, if you had bought some shares at 100 shillings
Yes.
and you have sold them at 200 shillings,
Yes.
the government will not leave you alone. It will charge you at a tax rate of 15%.
On the profit?
On the profit.
Okay.
And you remember those shares,
Yes.
whenever you are given some dividends, the government is still doing like this. You pay taxes for the dividends that you earn.
Yes, yes. Does it, what if the shares you sell at a loss?
Yeah, when you sell it at a loss, then you don't pay anything.
Okay, okay.
You don't pay
But as
anything.
long as you've made some profit?
Yes.
You pay?
You pay.
Okay.
Then there's another taxes. The other tax is stamp duty tax.
Yes.
Again, stamp duty tax is what you pay to the government. Again, when you are selling in a property.
When you're selling?
When you are selling.
When you're selling or when you're buying, or both?
Both.
The seller and the?
No, the person who pays for stamp duty tax
Yes.
is the buyer.
Oh, is the buyer.
Is the
Okay,
buyer.
Okay.
Then we have another form of tax called the turnover tax.
Yes.
Turnover tax, you remember we had spoken about corporation tax.
Yes, yes, yes.
So you can decide to pay corporation tax at that percent of the net profit the business has made, or 1% of the gross sales that the business has made.
No, that is on corporate.
On corporate.
You either pay the 30% of the profit?
Of the net profit.
Net profit?
Of the net profit.
Or 1% of the sales?
Of the sales.
Without removing...
Any expenses. So for turnover tax,
Yes.
whenever you make, whatever the sales, even if the company at the end of the day it suffered a loss,
Yes.
you still pay 1% of the sales. So it is up to the company to choose, do I need to go the corporation tax way of 30% or the turnover tax way?
I'm sure most of them go the 30% way.
Yes, yes.
Yeah.
So you will need to book me for another day,
Yes.
because there are other many forms of taxes.
Yes.
We have not discussed about betting tax.
Okay.
So betting tax, again, it's a different concept.
Yes.
Even exercise tax, there are two ways of charging exercise tax.
Okay.
Even the issue of VAT,
Yes.
there's an input tax, there's
Yes.
an output tax.
Yes.
Even income tax for pay as you earn.
Yes.
There are so many things that we can discuss to enlighten our viewers
Yes.
on the methods and incentives that are available for them,
Yes.
on how they can do something called tax avoidance.
Okay.
How they can avoid paying taxes.
Are you not going to be arrested because you are telling people not to pay tax, to avoid tax?
No, tax avoidance by there is very legal.
Yes.
It's very legal.
It is legal.
Illegal.
Yes.
What is illegal
Yeah.
is tax evasion.
Evasion, but avoidance is legal.
Avoidance is legal.
Okay.
You know, tax avoidance, for
Yes.
instance,
Yes.
you remember what you have just discussed about, do you want to go through do you want to pay corporate tax at 30%?
Yes.
Or do you want to pay turnover tax at 1% of
yes,
the
yes.
gross sales?
So you avoid the 1%?
So depending with now, you sit down with a tax expert,
Yes.
with an accountant, and you weigh which of the two is better for you, and now you avoid paying huge taxes, and you reduce your tax burden. So that's what is called tax avoidance.
So as a tax expert,
Yes.
which one would you go with?
I would say,
Yes.
you know, the other day I said that there are some questions that are ethically unprofessional to answer.
Yes.
But no, this one does not. This one I would say,
Yeah.
It depends on case-by-case basis.
Okay.
It depends on case-by-case basis.
All right.
There's someone who the case for turnover tax would work for him,
Yes.
but that would not work for another person.
Okay,
Yes,
okay,
yes.
okay. I think that's fine. So I think we will book you another meeting so that you can elaborate to us all those taxes, and you will also tell us on how to avoid tax avoidance.
But not to evade.
Not to evade,
Yes.
avoid. And you
Avoid.
have told us it is legal.
It is legal.
All right. Thank you. Viewers, I hope that you have learned a thing or two about tax-related matters. For me, I have learned that as long as you're breathing, you have to pay taxes. I think this topic of taxes is a bit broad, and that we will have to come up with another lesson. We will book Dr. Kamau for another lesson so that he can finish on tax-related matters. I hope you'll do better now that you have learned better. See you in the next lesson.